All right. So I want to say thank you guys for the opportunity to talk today. So as always, when we do these trainings on Thursdays, you have the ability to feel free to, if you have any questions, put them in the chat. Or if you want to use the little emoji thing to say, like, hey, I have a question. If I can find a break in the time, I'll do it. So we'll kind of get started here. I will just kind of mute everybody so we don't run into any snafus or things like that. So off we go. So today we're going to talk about business owner market. This has been a key topic. What I would say for stuff that I've talked about this year, business owner strategies, business owner solutions. Again, not the easiest market to penetrate, but once you get into it and you figure out the right words to say, the right ways to say it, all of a sudden you're going to find that this will be probably one of the best opportunities you could get for the fact that it will lead to renewals, referrals, and everything in between. So just kind of going back to how we design the system here. So with Valor, the way it's set up, obviously you guys know we do insurance. We do a lot of insurance. We do very well at insurance. We do retirement planning. So retirement planning, including qualified plans. We do, LIRPs for life insurance retirement plans. We do annuities. We have a partnership program for commercial property and casualty as well. Note the word commercial, underline that several times. Don't do home and auto yet. More or less, what we're doing is we're focusing on the higher end ticket things, and so yeah, all of this to kind of say that and health. So all of this to kind of say that business owners lead to opportunity. It is your own lead funnel system. So the more you talk to business owners, the more opportunities you can find because those business owners have employees typically. But as we talk about the business owner market today, what we're going to focus on really is, identifying and approaching business owners. So how do you get through to certain business owners? Where can you find them? And then what we're going to do is we're going to talk about what everyone on this call can do, talk about insurance as to why they need to protect their assets, why they need to protect their most important thing, which is their own business, and ultimately to keep out unwanted ownership, ultimately to protect against things that could happen to their business. So most importantly with this is the key person, buy, sell, and executive benefits. Um,
Yeah.
so we'll start out here in regards to the opportunity. Okay. 33.2, can't forget that point 2 million small business owners in America, and most of which have zero continuation, key person type strategies, anything in place. Typically, people will talk to them about it, but they may or may not know the right things to say to ultimately move the needle. But when you talk about this, 33.2 million small business owners in America, and you have to, as everyone on this call or anyone who watches this is in the same boat. You're watching this. Why? Because you are also a small business owner to a certain extent. So, what do most small business owners do? They try and make sure that their business is solvent, profitable, and then they don't want to make it too profitable because that means they have to owe Uncle Sam money. Okay. So, a lot of what the mentality is for a business owner is I need to make money. I need to keep making money. I need to feed my family. And that's the main mentality. So, when you think about where to find them, when you think about why you need to find them, you have to also think like a business owner. So, where to find them, and I know some of you work in this area, Chamber of Commerce, great place to network, resource. And, what I would say there is that oftentimes there is a insurance person inside the chamber. So you have to kind of pay attention that maybe you're not talking to them as the insurance expert inside the Chamber of Commerce, but more or less financial specialist, more or less, a person who reviews financial plans. You don't have to always say that you're the insurance person, but if it pertains to the idea of financial literacy, financial awareness, it's a great place to be and a great networking opportunity. BNI groups, once again, BNI groups, I can live without them, but they still have some type of benefit. The good thing about BNI groups is that it's specifically focused around small business owners and networking. Oftentimes, chapters have certain figureheads that kind of dominate the spot. So you'll see if it's a tenured spot already, they'll probably have an insurance chair and things like that. It doesn't mean that there's not opportunity for you to still network, grow, and ultimately build your business inside of the BNI group. LinkedIn, as you can see, you could filter certain things inside of LinkedIn. So, for example's sake, if you look for owner, founder, CEO, from that standpoint, you can generate a different network of people. Oftentimes, connecting with people, just even on LinkedIn in general, if you have a large following, say over 500 people plus, anytime you create a post, and someone else sees the post, checks the post, comments on the post, all of a sudden that goes to their networks as well. So communication is key on LinkedIn. From that standpoint, you can grow a larger portfolio, and most of the people on LinkedIn are not out there showing pictures of their cats. It is some form of business opportunity per se versus just simply, talking about, what they ate that morning. Um, then you talk about existing clients. Okay. So existing clients, ever think of going back and talking about existing clients, having the opportunity to connect with them again. This could be at the point of, say, an annual review. So if you're doing an annual review with a client and maybe you just didn't talk about it before, how awful would it be if you just said, hey, Phil, I just wanted to connect with you again. I know it's time for a review. I just want to let you know that, we actually partner with a small business solutions executive team. And in doing so, what it does is we help find ways to mitigate taxes, help you protect your families, help you protect your business against unwanted ownership. And we even offer free reviews, things like that. So again, using your existing clients you've already gotten the business from, you might uncover additional opportunities. CPAs and attorneys, that's a big one where when you think about talking to CPAs and attorneys, referral partners, that's where the money's at. So anybody who is working with CPAs and attorneys, CPAs especially, they're the ones who are trying to find tax deductions for their employees. So when you're trying to find tax deductions for your employee, or not employees, for your customers, so when you're trying to find tax deductions, what do? You look for options. So if you have the ability to provide different options and strategies, you're only making the CPA look better for their customers. And this one's kind of, fun. Golly, I can't complain. Every time someone comes in, I have to let them in, but it kicks my pen off. So local restaurants, salons, and retail strips. How many times have you guys gone to a grocery store that's connected to like a strip mall? Typically there's like five or six small businesses inside of that strip mall. So how often would you walk in to talk about how you enjoy, for example's sake, the business? Maybe it's a coffee shop, nail salon, things like that, where you enjoy the business and that you want to talk with them about what you do. Um, so a question came up, are CPAs bombarded by insurance agents? Probably, but here's the thing is is one, if you don't ask the question, it's just like saying no, right? So if you ask the question and they say yes, you're moving forward. The big thing is, and Angela, the reason why I really love that question is much like anything, what is your value prop to stand out? Okay. So typically what I would say is, Mr. and Mrs. CPA, I know you work very well with your clients. I've heard from several people that I've talked to that, you do a great job for them. I do very well for my customers in my line of business, and I thought it'd be important for us to just kind of have a good conversation. Um, and whatever way you want to do it to kind of get in the door, I typically work with successful people such as yourself. Oftentimes, a lot of people in the CPA world have a lot on their plates in regards to trying to find different ways to make sure, their customers stay aligned with and protected against tax mitigation, figuring out, how to hit deadlines to make sure that there's no penalties and things like that. What I would like to offer is through my services, I can find different ways to help you shine in front of your customers, your and things like that. So we offer things like tax deductions. We offer things like protection plans and other things. So you can put the list out of the menu of what you have to offer, and the interesting thing when I talk about the spider web of opportunity of what we have is it's a connector piece. So maybe someone doesn't want to do health insurance with me, but they want to do life insurance or vice versa, things like that. The idea is that what connector can you get to show your value? And then if you show value there and the life insurance person messes up, well, guess what? You have a great relationship. So now's a chance to exert yourself in a different manner and opportunity. So that's what I would say. Yeah, no problem, Angela. It's a great question. So let's start out with a buy-sell agreement. Oftentimes, you look at a buy-sell agreement and you think, why is this so important? Um, the biggest phrase in this, I think, is most important, legally binding agreements. When you talk about business owners. So what happens to business owners' interests when they die, become disabled even? A lot of people don't think about that or just want to exit the business. There are tons of people who have exit strategies or business owner exit strategies. There's seminars, there's courses on it, on how to get, into that space. So you are also an expert, or you rely on other people to do it and help lead the source back to you. But the idea here is that when you think about these legally binding agreements, let's say, I'm going to pick on Tanisha because I see you on the screen. So Tanisha and I are business owners, okay? And when we talk about business owners in this standpoint, let's say I'll kick the bucket. I always kick the bucket. Tanisha gets 100% of the work, but only 50% of the asset because my wife is still alive. So the idea of buy-sell agreements really is how do you kick out unwanted ownership? And that can sound kind of mean, but business is business. We all know that for a fact that business is business. There's a couple different ways you can do it, like a cross purchase plan or an entity purchase. And when you do this, the idea once again is to really, again, focus on the protection side of the business. So I left this up on the screen for people who like to see, the wording. I'm more of a pretty picture guy. So I am going to do what I do best and draw stick figures. So this is Phil. Okay, this is Phil owner, and I'm not going to be gender appropriate. Okay, so this is crap. I was on a roll here. All right, so this is owner number two. Okay, so in a cross purchase, you have typically two owners, and the way to do it is you find a valuation of the company. Okay. We have several carriers that can do business valuations for free. North American is one of them. Nationwide is one of them, where they will actually do a valuation of the company's business on the house. Okay. Now, when you look at that, why would they do that? Well, because they hope that you will, again, give them the business after you do the valuation. Doesn't always have to be the case. So, when you look at this, though, let's say the valuation of our business is roughly, golly Moses, I should have seen that coming, roughly $2 million. Okay. So, if in the circumstance where, let's say this person, dies, I'll put the little RIP in place there. Now, all of a sudden, this $2 million valuation is owned by this person, but it's still, let's just say, a 50-50, and they're only getting a million of the profit. So, so when you think about that, how do we absolve these issues and make the remaining business owner whole? So again, we have business owner A and business owner B. So business owner A, we got someone else coming in. So business owner A and business owner B. Um, if we had a situation here where we bought life insurance policies on each of them, let's just say, for example's sake, back in the old days, we would each buy $1 million policy on each other. So A is the owner of B's policy insured, and B is the owner and beneficiary of A being the insured. Now, what happens is let's say you have spouse down here, and A kicks the bucket. Okay. Now, A's policy will go to person B, who will then pay off the spouse to get full and 100% ownership. They use tax-free money to pay off the spouse to relinquish their shares in the company back to owner B. Now, one thing that's changed since this example, this has been the typical example that you've seen, or may or may not have seen in the past, um, where you have a $2 million valuation for the business and you split it 50-50. Well, if you do research, and once again, to Angela, to kind of say to your question, um, how do you stand out? Well, there's a case called the Connelly case where basically they said that each person should have $2 million because if I sold this and or let's say I kicked the bucket and they paid the 2 million to the spouse is going to have to pay money because it's shares. They're selling their shares back to the other owner. The owner doesn't pay taxes, but the spouse will. Aziz, you had a question?
Okay, you just answered my question. So my question was that why can't uh, a partner A buy a policy and put beneficiary as a spouse and let partner B pay for the premium? But what you just said before
Yeah, it's a
answered
share in
the
ownership. Yeah.
okay.
So, and the thing is too, to kind of overemphasize that everybody is fine when everyone's still alive. So Aziz, you and I are partners, right? We're friends. We're great. We go out to dinner together. We have a great old time. But my wife doesn't know you. We're in different states, and all of a sudden, things go and I die again. I always hate this because I die in every example. Uh, but what I would say is that when you look at the process now, she doesn't know you, but now she's going to get 50% of the assets and do none of the work. It's not fair. So people will put buy-sell agreements in place, The hard part is most people forget to put the funding in place to cover the buy sell. So we could say, we each are going to pay out 2 million to a spouse, depending on who dies first, but it doesn't exactly say how. So you'll find that some people will put the lingo together, and oh, by the way, you can do a free policy review of a buy-sell agreement. They're like 8 pages. It's not too extensive. But when you do that, you find out and you uncover opportunity. So, did they do a buy sell agreement? Can you replace it? Can you find something more cost efficient? Maybe needs have changed. So, Kathy, with your question, what if the business is worth double when one passes? These are things that, as a person in our position, you have to constantly go back and see if you have to modify, revise, improve, and add on to as well. Yeah, Aziz.
So I have a client who are twins, and they have business. Obviously, we wanted to do the business valuation and all that too. Now, one of
Hmm.
them has about, I would say, $5 million policy, and the other one has about only 2 million. So when we do
Hmm.
buy and sell, do they both have to have an equal amount of personal insurance, then they do buy sell, or how it's going to work out? What's the
Yeah,
mechanic?
no, and when you think about it, a lot of people start a business because that's usually 50-50, but it depends on their owner operating agreement. So if, again, we go back to you and I being business owner partners, and let's say you're worth 70% of the company, I'm worth 30% of the company, that's where you'd have a variation in insurance. So so from that standpoint, all of that matters, especially when you're doing the reviews. Okay, so if depending on what it is, and you don't want to, it's like separating church and state, right? You don't want your personal life insurance to impact what the business objective is. Okay, so fast forward, you take an application. A lot of people don't realize in the application when they ask why you're buying the insurance, it's all there. There's business insurance, there's personal insurance, and there's different calculations for each. So we'll kind of talk about that when we get to the executive bonus section, because that becomes, in my opinion, it's the topic's a little taboo, because people are looking for tax deductions, which, by the way, all of these, if you have an S Corp or an LLC or sole proprietorship, there is no tax deductions. None. If you have a C Corp, tax deductions. It is not pre-tax. It is all post-tax. So you would pay, you would get salary deferral. You would take from your salary, which would be added on to buy the other person's insurance. It would not be a tax deduction. If you have a very crafty CPA, which every CPA I've talked to has all said the same thing, that is not tax deductible. But if you have some magical CPA who can find a way, all I do is sell insurance. Okay, so I'm not I'm not a CPA. Um, Angela, in regards to your response, does the spouse have to accept the money? The answer is yes. This is a legal tender document. So the buy-sell agreement takes precedence over anything. It's like a will, it's like a trust. Everything from that standpoint, that is all legal documentation. They have to take the money, they have to give up the shares as part of the agreement. Um, is there a minimum number of employees a factor when it comes to these free business valuations? Raphael, what I would say is if you have a party of one, you don't need a value, you don't need a valuation. Because again, when you talk about business versus personal insurance, I'll tell you right now, you get more multiples in personal insurance than you do business insurance. Okay. So that's why a multiple for a buy-sell agreement, like if you did it the cheap and dirty way, is like 10x your salary. as opposed to the actual valuation of the business. That's what some people do to do real quick. But if you look at, say, age is usually like 20x your salary. So, so what I would say is based on the factors, I would say is the gross worth the grief, it would be more of a successful business, not a new business. What I would say is just talk to me if you have someone who is looking for a valuation to see if it makes sense because it does take like 2 or 3 weeks to do. So it's not a short process to say the least. So I think I answered all the questions there. Okay, cool. So this would be if you have a cross purchase. Now, what I would say is that if you have a I'll just say business entity buy sell agreement. Let's just say this is widget factory and you got little smoke coming out of that little chimney. And you have three business owners, we'll say A, B, and C. So same thing again, business owner A passes away, so now they want to be 50-50 owners. Well, instead of A buying a policy on B and C, B doing the same, and you have six policies, we can just have the entity buy a policy on each person, and the business entity then gets the benefit. Usually it's one of these people at the top, but nonetheless, it will be instructed to pay out the, once again, spouse of the person who's passed away. Okay. So if you have more than two people cross purchase, not feasible and more policies from your end as a producer, that's where you do a business entity buy sell agreement. Now, with all of this, through our partners at Trusty Friend, they can do buy sell agreements. So if you're looking to not only get the insurance policies, but you want to get, I guess, what Drew says on Tuesdays for health, when you upgrade, do you want fries with that? We could do the buy sell agreement and you could get a fee to do that. But more importantly, what does it do? It controls your ecosystem. It controls your environment. You have less people on the outside trying to get into your system. So that's the other reason why I say if you haven't signed up for Trusty Friend yet, let me know. I can send you the link. It is very, very, very important to have that tool in your tool belt. So we're going to move on to the next topic, but does anyone have any other questions about the buy-sell agreement?
I have a
Cool.
question. So what about the premium? Who's going to pay the premium? Is it from the business income or from, I think you said from their salary, something like that?
Yeah, it's so basically like so say Netra, you and I were business owners together, right? And we are an S corp. An S corp, you're typically going to have a W-2 income, and so therefore you will use that W-2 income and get say unfortunately my premium is going to be a little bit more than yours. So from that standpoint, what we do is we give you the premium in your salary to cover my cost, and then in vice versa, I would get the salary or the added extra to cover your cost. Now, why do we do that? The idea really is to if I gave you, for example's sake, a tax deduction on that, then what happens is the money becomes taxable to a certain extent. So what happens is if you're trying to do valuations with clean numbers, now all of a sudden you added an extra factor into it too. So that's why a lot of times when they talk about it from a taxation perspective, you would have to set it up where you get almost like a executive bonus where you get a little bonus to pay for the other person's insurance. That's really all it is. But the idea again is for protection purposes.
So to be clear, and I think, and also this goes by the individual, like the rating will be is depending upon that particular business partner's health, age, everything, right?
Correct.
Okay.
Correct. Yep. And so, and when you think about it too, so, we have a business together and, my premiums cost more. Yes, you'll get more, you'll have to pay more, but my health is worse. So if I do pass away, that's less money altogether to pay off my wife. So again, if I'm doing this for pennies on the dollar, what are we always trying to do with life insurance? We're trying to shift risk. Okay. We're trying to shift risk from our personal plate to an insurance company for pennies on the dollar. So $2 million protection only cost me, let's just even say it's $2,000 a year for 20 years. If something happens during that time frame, the rate of return, the ROI, whatever you want to say, is so much higher than what you put into it, but it's the cost of doing business. And it's the same thing when people talk about investments. You can't put all of your investments in something aggressive and risky because if something happens, they all just tank and you lose 50% of your portfolio. So this is like that defense that any business owner should have to protect their business. It's like emergency funds for people who are just setting up their own personal safety net, if you will, inside the house. Same thing. This is all these emergency funds or safety precautions that everyone should have as business owners. So that's the main thing. But I know a lot of people are always looking for deductions. This one is not the place for it, um, nor is key person. So I was gonna say these are all great questions too, but I want to make sure I got 20 minutes. So um key person.
So
Go
are
ahead.
we able to like quote like for all the carriers we have, or as you said, only few people do the buy-sell agreement, like
They all
not
do it. Yeah, they all do it.
all
So
all do it. Okay.
yep. So good example, someone like myself with the build, I'd probably be a prudential case. But other people who are doing very well, living benefit, story, Corbridge, North American, you can have different strokes, no pun intended, for different folks. So that would be the key thing.
So we can have two different companies. That's okay.
1,000%. Yep. The total goal though is the dollar amount, not so much the carrier. I could care less who the carrier is.
Got it.
Okay. So now what we're doing in this one with key person, this is the general idea that you have a business owner or business owners, and what you're doing is you're stepping down one level. Okay. So you have a team, you have someone who is a benefactor of that team. So you think of someone like a total salesperson generating a quarter of the revenue by themselves. Someone who has a unique skill, a technical trait that can't be replicated. Executive management team with solid relationships around the business, around the industry. Business owner, the founder, that depends on how we project this, because if it's just me as the owner of Valor, that doesn't count as what I would say key person, because I could again, instead of having a 5 to 10x for a key person annual compensation, I could do more with just my personal income and revenue. But what we look at is for key people in the organization, the ones that you give the keys to lock up at night, the ones who you can't live without. Those are the ones that you would look at from this standpoint as to say, why do you need coverage on them? Okay. So when you look at this strategy, again, I'm more of a, yeah, Preeti, you had a question?
Oh, sorry, Phil.
Oh, no worries. All right. So let's say from the top level, you have a business, okay? Business. And then you have not your owners. Your owners are in the business section, but you have key person one and key person two. Okay. And what do? They generate revenue for your company, they generate sales. So, if, for example's sake, this person passes away, rest in peace, now all of a sudden, this business has a drop in production, let's say 25%. Okay. So, from that standpoint, how valuable is it to have this key person covered to a certain extent so that if there is a loss, there's a supplementation from the life insurance to make up for that 25% gap? So, could the business have to spend money to recruit from a different organization, offer an incentives package to bring someone over? Do they use it as a sweetener to sell the business and say, hey, my business would typically cost 650. Well, I'll give it to you for 550 because you have additional percentages from the life insurance to give to the business. Uh, do you want to have it, maybe find time to bring in more talent and maybe instead of just two key people, you find, two people who can do, we'll just say people here, not key people, but maybe they can do the job of this one person, but you can supplement using the assets that you received from this standpoint. Now, unlike the other scenario, again, the key person here has no ownership stake per se. What they really are is they're there for a paycheck or they're there to make money, but they're not at that executive business owner level. What they're at is they're still getting paid. So what we do, again, we put life insurance policies on these people, but the beneficiary once again is the business. So it's your key office personnel, it's not you as the business owner. But what I often say with people is the key person insurance goes hand in hand with the next presentation or the next sales topic because a lot of times this key person, if they drive revenue, if they drive a lot of business for the company, and let's say I said, hey Aziz, I'm going to buy $1 million policy on you. So if you croak, I need that $1 million, right? Yeah, I'm killing you off this time. I'm tired of dying. Um, so Noreen probably wouldn't like the fact that I just made $1 million off of you if you pass away, and she's mourning, and I'm, counting hundreds, at home. Not that I would. I would mourn too, don't get me wrong. So oftentimes a business owner will complement or supplement a key person with not only just, hey, I'm getting insurance on you to protect my business, but what I'm also going to do is talk about this 162 executive bonus plan. Okay, if you can see it, NQDC stands for non-qualified deferred comp. Salary deferral is an opportunity for me as a business owner to say that, hey, I have 30 people in my organization. I only like two of them. So I'm going to give those two people an executive bonus plan. It's a sweetener to to keep those people, and I could care less about the other 28 people. Uh, the idea is we're gonna offer a bonus to some executives, maybe that person who does the 25% of my sales per year. This is the big part. So again, us business owners, what do we look for? Tax deductions. It's deductible to the business owner. The executive owns the policy, not the business. They control the cash value. So what are we doing here? We're giving a complimentary, it's a LIRP plan, a life insurance retirement plan. But what it does is it offers a lot of opportunities for the key person. First off, the idea that uh, they feel good about being at their organization. They feel appreciated. They're getting an extra kicker on their retirement plans if there are retirement plans offered. They're also providing a death benefit. So if they don't make it home tonight, again, the key person owns the policy. So the death benefit goes to the beneficiary. So what they look at is a self-completing policy for the key person. And most importantly, it's the appreciation of doing a good job. So last time I'm going to draw crappy pictures. Okay, I promise. So again, we have the business. We'll put the little chimney on top with the little smoke going through it. Don't worry, it's non-toxic, so no birds are dying here. Okay, you have your key person. You're going to offer them, let's say for example's sake, $20,000 a year in a bonus. Well, that key person is going to put it into a executive bonus plan, or you could call it a LIRP, life insurance retirement plan, and that is $20,000 per year. Let's say there's a commitment of 10 years. Like I promised to give this key person $20,000 a year for 10 years. So, in doing this, this person gets a retirement package that is um, discriminatory. They don't have to give it to everybody, they're just giving it to this person. And because it doesn't fall under ERISA plans, which is a typical 401k, they're allowed to do that. It's an incentive bonus. So, they also have a life insurance policy. So, if something happens, they will be protected from that standpoint too. And we'll just say living benefits as well. So, depending on the carrier that you pick. So, from that standpoint, this person feels appreciated. We have a commitment that for $20,000 per year for the next 10 years, they're going to stay with this old factory. But the best part about this is that 20K that you gave out is now going to get a tax deduction because it's a wage. I'm paying a wage to the employee. Now, the employee might argue and say, hey, I'm not getting a full 20,000 because I have to pay taxes on that. So what they call that is a double bonus where you give them 20,000 and then you give them another check to accomplish the taxes for the 20,000 and the taxes for the second bonus. It's a double bonus strategy. So they net out 20,000. But I'm happy as a business owner. I keep my guy or gal, top person. I get a tax deduction or a wage deduction, and the employee feels loved because they get a retirement plan, living benefits, and life insurance and a self-completing policy. Rafael, I saw you went off mute. What's up?
Yeah, I was going to ask in the double bonus scenario, both of those bonuses are tax deductible for the owner?
Correct. Yep.
Thanks.
Yeah, no problem. So yeah, I mean, the employee wins with the net, total, and it's after tax dollars too. So again, the discriminatory part, this is the only time I'll say discriminatory is good, right? Because I can choose who I want to give it to, and that's the big thing. I'll answer a couple quick questions here. Angela, is key person easier to get than personal insurance? No, it's the same underwriting. You just have less multiple for key person, like 5 or 10 times your salary, versus if I bought personal insurance, it could be 10, 20, maybe even 30 or 40, depending on the carrier.
Okay, so what I was thinking there is like if there's a husband and wife LLC and the wife owns it because then it's a woman-owned business, but he does all the tech, he does all the background, he does everything. So then the wife is taking out this, paying the husband. Like, is that something that is totally legit and doable? Or no, am I thinking too far out of the box?
You raise a good question, and it often deals with family office type of scenarios or, families. And I'll be honest, my wife and I are 50-50 owners. She technically makes more than me for tax purposes, but the idea is that, we have equal ownership. Now, neither of us have a buy-sell agreement on each other because upon passing, we, even though we're business owners, have an unlimited marital gift to the other person. So I will automatically give my 50% ownership of Valor over to my wife upon my passing, or vice versa if she passes. So there's no reason for us to get buy sells on each other, even if our salaries are different or anything like that, because you get a higher multiple with the personal insurance. So, and because there's no tax deductions for that, there's no real reason to try and go through, because the insurance carriers are actually going to be a little bit more scrutinous. They'll scrutinize more with business insurance and personal. So a lot of times people will do personal insurance first. Same thing with collateral assignments. So if a bank needs to own something like an insurance policy, people will do collateral assignment with the beneficiary being their spouse, and then add the collateral assignment after because the underwriting can be a pain in the keister.
Okay, thank you.
No problem. Does business-owned life insurance count towards a person's total human life value? It depends on the ownership, Chris. So, yes and no, best way to put it. All of that, it's a great question, because, if someone dies, a death benefit has to be paid out. So you could argue yes, but depending on who you're talking about, like if it's Johnny Everyman, you're not talking like 30, 40, $50 million. I don't think you'll run into an issue in regards to the human life value from that standpoint. So again, for those who don't know what human life value is, multiples, again, 10, 20, 30x. So you see it a lot too with professional athletes. So if a company, be it the organization, wants to get insurance on all their players in case they die, you can only put so many policies with one company due to concentration risk. So there's all these different things behind the scenes with underwriting that a lot of people just have no idea exist. Sadly, I do. I don't know if that's a good thing or a bad thing. But yeah, that's all of that stuff from the human life value that can be a situation, but really when it boils down to it, this is where coordination, CPAs, depending on how big the business is, all of that stuff matters. I've done 20 years of this and no case has ever been the same. So it's a toss up with that one, but that is a great question. Um, Aziz, you say SEP IRA is a better option, question mark. The answer I would say is no. It really is, once again, a toss up based on the scenario. So if I Phil Resch and my wife, again, owners, if I give her executive bonus plan, there really isn't a tax deduction for me because we both are married filing jointly. So there's no point because I'm not getting a deduction. However, so I would use that as a personal versus a business. But if my son, who is 18 or soon to be 18, and then he goes off and he works for me now and I don't claim him as a dependent, I can give him a bonus and get a deduction for it because he's off my tax liability at that point. He's no longer a dependent. So the SEP is a very interesting animal because if you did a SEP and you had employees, you have to give them the same percentage that you're getting. So if I did 25% of my net profit for my SEP deduction, my wife gets 25%, and employee A, B, and C do as well. So really the discriminatory part of what the executive bonus would do for some of the upper echelon people makes more sense. But if it's a smaller group and it's all family, then a SEP, to get the deductions today, and you're okay paying the taxes tomorrow, then yes, it could make sense, but they can all be balanced out. And that's the beauty of what we do, because for those who don't know, we can also sell SEPs. We can sell 401ks, 412(b)(3)s. We've talked about this before, but some people, it might be the first time you're hearing it. So, um, so, so all that being said is that every situation is different. And the big thing is that as you go through this process, as you go through this conversation, what I will say is that lean on me, lean on leadership that you have in your organization. We're here to help. And ultimately, once you get it, you'll get it. And once you got it, you're good. So, but when it comes to, again, the idea of tax deductions, this executive bonus is really where you'll find them. But you have to make sure that the protection is in place first before you get to the good stuff. And, you know, I would say that's probably the most important thing. So just kind of skipping ahead here. Um, Kind of like what I was saying before, business owners are buyers. They understand, return on investment, expense deductibility, things like that. So speak their language. All about tax deductions, all about ways to get in the door. You may say the word tax deductions to get you in the door and talk nothing about tax deductions. The idea is to get in the door and have a conversation. So start every small business conversation with 3 discovery questions. If you didn't make it home tonight, is there a plan set up for the business without you? Oh, well, my son's going to take over. Does your wife know that? I mean, we're talking even your family. Does your wife know that? Because if you pass away and you think your son's going to take over, your wife might say, "No, I'm going to sell this bad boy," and to everybody else. Once someone passes, everything changes. And if it's not in writing, you leave it up to interpretation, and that's the worst thing you can do. So make sure, no matter how big or how small it is, you got to get it in writing. It destroys any type of nebulous, inquiries or contestability to what you're doing. And like I said earlier, I'll say again, through our partners, you can get paid to set up these plans to make sure that from a defensive posture, your business owners are protected. And then you can get into all the other fun stuff like, 412s, LERPs, and all the other stuff. But once you tackle the business at the top, then you start to work on the personal and then the referrals. All of this should make sense as to you hit the people at the top. They're successful for a reason. You get what you ask for, you work with the right clientele, and then it stems down from there with referrals. And that's the name of the game. So if you do it right, you don't need leads. You don't need people telling you they're going to give you a bucket full of leads for you know, anyway, I'll spare you guys my pontification on that. So that being said, I will also just kind of let you guys know, I have to jump to another Zoom. There's 2 people who have asked to talk to me afterwards. I will call you after I'm done with that Zoom, so it'll probably be in about an hour. And then we can go from there. So, all right. Any last question, comment, raw outbursts of emotion? Awesome.
Amazing. Amazing.
Yeah, thank you, Phil.
All right, guys. You have a great rest of your night. If we don't talk, have a great weekend. Again, last thing I'll say, I am obviously going to be traveling a lot. So if you need me, text, call, email, carrier pigeon, and say, "Phil, I have a client or I need to talk to you, X, Y, Z reason." I'm looking at Wednesday, Thursday, and Friday, 2, 3, or 4. Do you have time? And I will look and see if I can move stuff around. I promise I will be here for you. So, again, thank you guys,
Do you
and
have time on
we will
Monday?
talk soon. What's that?
Do you have time on Monday?
Not for you. All right, guys.
All right, guys.
Have a great
Thank you.
weekend, all right?
Thank you.
Thank
Bye.
you.